Is this market overvalued? You're paying $30 for every future dollar of expected profits in Microsoft and only 24 for Nvidia. That would seem irrational, given that Nvidia probably has greater prospects than even the mighty Microsoft. Nvidia, by the way, was at $19. You could have picked it up a few weeks ago for every future dollar of expected profits. Of course, JP Morgan is dirt cheap. So is Wells Fargo and Bank of America. Whereas Tesla, you're paying $122 for every dollar of future profit. Valuation are not the only things that move markets. Put famously by Warren Buffett, in the short term, the stock market is a voting machine, i.e. it's momentum driven or noise driven, such as so much voting. Whereas in the long term, it's a weighing machine. It actually does look at fundamentals such as valuation. People find valuation difficult to understand. Let me explain it this way. Let's say you've got a rental property, which is generating rent of $10,000 a year. And I say to you, I'll sell it to you for $20,000. You would bite my arm off, okay, for it. If I said to you, I'll sell it to you for $2 million, you'd say you're a fool and it's overpriced. If you bought it at the underpriced level of 20,000, you probably flip it and sell it for 100,000 just like this. Hence the price goes up and the next person to sell it probably would only be able to sell it for 101,000 or 110. That is what I mean about the fact that what valuation is with companies, but valuation is not the only thing. Future projected growth is important. Momentum is important in the short term as well. We know trends tend to persist. We also know stocks at all-time highs tend to continue higher than stocks at all-time lows suddenly turn around and not go any lower. Statistically, we know that. It's something that can be measured. What's important with the stock market is actually to have run those experiments, or at least seen the research which has run those experiments so you can copy and learn off them. Sadly, too often people don't realize that there is an approach, it's worth taking, and instead, guess what they do? They roll the dice. They see squares with numbers and they think that must be a dice, let's roll the dice. Don't do that with your investing, don't do it with your pension. Be more disciplined. If you want to learn a lot more about this for free, have a look at the link in the bio, follow, like more, save this video as well. Thank you all very much.